Good to be back in Duquesne Hall. Lex told you that I was a founder of the competition here, but I really am a serial entrepreneur. When I got out of school, I started my first software company within 2 months, and actually had a total of 4 startups, one of which completely cratered, had to just shut it down, but 3 of which eventually got sold. But the one that I had for 30 years was the one that enabled me to retire and become a professor here in 2001. So I've been teaching entrepreneurship here until last year, that is, since 2001. It's been a wonderful, wonderful experience working with so many wonderful teams of students over those many years. Let me ask first, of the people in this room, how many of you are in the final 42 teams that made the semis, that are here to learn about writing your business plan for the semifinal round? Okay, how many of you are not among those 42 teams? Wow, hats off to you guys. I hope you get enough out of this that you can write a successful business plan and get it launched also. That's very impressive. Glad to have you here. And also, I'd like a breakdown. How many of you have GW Upstart presentations, social ventures? Just a show of hands. Good, good. We just started that 2 years ago as a separate track. And as you may know, the #1 team last year was the social venture, and I'm sure we'll have many more great ones this year. Just a little background. Entrepreneurship, you may know, is the #1 fastest growing course of study in universities today across the United States. And obviously you're part of that because you're here tonight. It's also a major contributor to our economy. As you can see some of the statistics, over 50% of GDP in our country, as it's normally measured, the private GDP, not government, but private GDP, comes from entrepreneurial-led small businesses. In fact, it's become quite a big discussion about the economy of the United States and the importance of creating new jobs and the importance of innovations. And small businesses are really far and away the leaders in both of those categories. In terms of creating new jobs, some 70% plus of all new jobs in our economy are created by startup businesses in the first few years they're in business. And so we need to have more and more new businesses being created to reduce our unemployment and create jobs. And on the innovation front, the statistic there is one that continues to astound me, but it's still true today, that if you compare new jobs created per employee between small businesses and large businesses. And by the way, the Commerce Department of the United States breaks all companies down between small, medium, and large. So I'm comparing the small with the large here. The small ones generate 13 times as many new jobs per employee as the big businesses do. Great innovations, 13 times as many new innovations. That's really measured by patents and intellectual property creation. 13 times as many patents as the big companies do. Let me just talk about why you write a business plan. The second bullet talks about the one that's important to you right now. Inside your company, you will have this plan in writing as a guide to carry you forward as you launch your new business, and you can compare what happens in the real world with what you thought would happen when you wrote the plan. And I can predict there'll be differences, maybe not great differences, but that's a great reason to have a business plan. But the other real big reason, and the textbooks all talk about both reasons, inside the company and outside. The outside the company reason has to do with raising capital and finding investors, because they want to read about your business in a coherent way, and a business plan is the best way to do that. It also applies to lenders, like bankers that you might approach about getting a loan or a line of credit. It would also apply to many other situations. A lot of you may end up in incubators somewhere around town when you get your business going. And to get into an incubator, you need to show them your business plan. They want to make sure that you know what you're doing, or they won't want you necessarily in their incubator. But actually, there's a third reason I'd like to mention besides the two textbook reasons, and this is one that I think you may be beginning to feel a little bit personally. Once you've gone through the process of writing a business plan and you've got all this evaluation of the competition and how hard it's going to be and how much money you have to raise and et cetera, does it really pass your own personal litmus test in terms of what is it worth it? Do you really want to go ahead and do it? And it's a reality check, I guess you'd say. Do you really want to proceed? So that's a third reason for writing it. But I hope that as you've worked on your plan, you become more and more excited about it. But it is a reality check because you're putting down in black and white a lot of information that you've probably never written down before about the hard facts. Okay, let's get into the structure of the plan. You all probably know by now the rules. It's got to be 10 pages maximum, plus 5 for the appendix. And by the way, the cover page and the table of contents don't count. So start with page 1 after the table of contents. So you have your 10 pages maximum. And do try to write all 10 if you can. There are 8 required sections for the judges to evaluate you on. And those are listed on the website. I hope you're familiar with those 8 because I'm going to be going through them tonight. But if you have 10 pages and 8 sections, my advice is to write at least 1 full page on each of the 8 topics. And then pick your strongest areas to write more about. Like if your strongest area is your value proposition and your strategy, whatever section number that is, write 2 pages on the value proposition and strategy, that section. Or if financials are your strength, write 2 pages on financials. And then the last point is an obvious one. You don't want to be too flashy, too glitzy, but you want to have a nice, clean, well-written plan. It's really important that it be well-written. That's actually 10% of the points right there. A few red flags. Let me just comment on a couple of these. You need to have, when you raise money from outside investors, you need to have some of your own skin in the game. I'm reminded of my first startup. As I said, it was 2 months after I got out of business school, and I had just finished paying for my Stanford MBA myself, and my total net worth was $2,000. Actually, that's in today's dollars. It was actually less than that back then, but in today's dollars, $2,000. And I was talking to one of the first investors that I approached about investing in my startup, and he said, well, how much are you putting in? And I said, well, what do you think I should put in? And he said, we should put in, whatever you can afford, whatever that would be. And so I agreed to put in my $2,000. And it really not only ended up being a good investment, but it was a way I could get other investors to come in too. Because if you have no skin in the game, they don't want to get involved either usually. And then the third bullet I want to emphasize, and you've probably heard this from Lex McCusker among others, and that is, don't start with assumptions that are global, like saying, the population of the planet is 7 billion people, and I know I can sell at least 1% of those people and sell 70 million of my products. Don't use the top-down approach like that. Use the bottom-up. Start with your customer interviews and figure out how many people are really going to buy it, and then multiply the number of sales times the price per product to figure out what your revenues are going to be, not the other way around. Just a word about market research. One of the real strengths of GW's position, and especially at Gelman Library, is that there's a lot of research available beyond the primary research that you're gathering from customer interviews and actually being in the marketplace. And that library research is called secondary research. And it's already been collected by other folks. Let me just go to the next slide here. And there's a guy over at Gelman named Shmuel Ben-Gad, who is GW's Entrepreneurship Small Business Librarian. And if you haven't run into him, there's his email address. You may want to introduce yourself. And there's a website, liveguides.gw.edu/entrepreneurship. A lot of information, including all of the marketresearch.com data that's available. It's a very expensive subscription for GW to purchase, but marketresearch.com is a multi-volume collection of information on every major industry. So if you're trying to get information about the size of your industry or your competitors, it's a great resource, great place to go. I recommend it. Get right into the structure of your plan now. These are the 8 sections on which the judges are going to be doing their evaluations. My words are really sort of a blend of the words from both the general entrepreneurship track and the social venture track. If you look on the website, they actually have slightly different descriptions, words, to describe the 8 sections on each of the 2 tracks. So I'm going to be using this set of descriptions tonight, which is, as I say, sort of a blend of the 2 that are shown for the social judges versus the general entrepreneurship judges. These 8 topics will be judged and will account for 75% of your score from the judges. In addition, there's a 15% score from the judge that's their impression, after reading all 8 of these, of the viability of your new business. And then there's a 10% score that's based on the clarity of the writing that you put in. So it's obviously a total of 100%. But of these 8, there's one that counts more than any of the others. Who can tell me which one that is that has a higher weight than any of the other 7? You're going to have to study these. I thought at least one person would be able to tell me which one it was.
Customer development?
I'm sorry? No, it's not customer development.
Strategy and value proposition?
Not value prop either. Not management team. What was this one? No, not the management team. It may be for some people, private investors, they would probably say financials, but it's not for our judges. It's only 10% of the score. Yes, the fit, the market fit with your product or service is a 15% score. But you should just make yourself familiar with the weights, and I'd recommend putting a little more time into number 2, just for that reason. I'm not going to spend more time on number 2 tonight, but that's just a tip for you guys. I'm actually going to spend more time on number 4 and number 8, which I think are important as an investor, looking at the value prop and strategy in number 4 and looking at the financials in number 8. But for the judges, look at the weights on the website. In fact, let me ask you guys, if a judge is looking at your business plan and they've got the 8 sections laid out, which section do you think the judge is going to read first to get a feel for your business plan? Yeah. Executive summary. I think you're right. They probably will start there because they want to figure out what your product or service is and what the industry is and all the stuff you're going to put in your executive summary. What about an investor that picks up the plan and wants to look at it? Which one do you think that person might look at first out of the 8? Financials. Often it is. Sometimes it's executive summary, but they often flip right to the back. In fact, they'll skip the number 8 and they'll go to the appendix where you probably have a spreadsheet of all your financial projection numbers. They want to see the numbers. But everybody's different. I like number 4 myself, strategy and value proposition. I think that's really critical. Let's go on here. I'm going to talk about each of the 8 and just feel free to interrupt me with questions as we go through this. What the judges are looking for in the executive summary are really three things. If you look at the criteria that are laid out on the website, it's a description of the business, the industry or sector or space that it's in, and thirdly, any innovations that you've come up with to make your company really stand out as being cutting edge and innovative. That's what they're looking for. But on the other hand, I would say, when I read an executive summary, what I'm impressed with more than anything else is the energy and the passion and the commitment that I see expressed in the words. You need to tell your story. If there's a story behind why you're starting this type of business, a personal incident or something about your life that really inspires you to pursue this particular type of product or service in this particular business that you're writing a plan about. And then you do have to include, as you know, and this is in the rules, in the a 20-word description. It doesn't say where you need to put that in, but it's got to be in this first section somewhere. You might want to just put it right up front. I think as a former judge, I like to read that right at the top because it sometimes gives me a good focus of exactly what the business is about right at the beginning. And you distill it down to 20 words. I like that. Last year it was 50 words, but the 20-word really gets it concise, just what we need. Any questions on executive summary? Okay, let's go to the one that counts 15%. The product or services fit with the market demand. How well is the need being met by your new product or service is really the question here. And this is a more detailed description of the product or service than you had in your executive summary. Here you're digging down to a deeper level in terms of exposing exactly what your product is or how your service is delivered and what it consists of. And one of the things you want to be careful here is to be very honest about how well your product meets the needs of the marketplace. If it doesn't do everything, but you think maybe in a future version of your product or service it will do everything the market needs, say that and be honest about it. Because sometimes people brag about their products and there's an elephant in the room, so to speak, where there's something lacking. And if there is something lacking in your product, acknowledge it and say how you're going to deal with that, maybe in the future, or how you're attempting to deal with it now to make it a better product or service to really fulfill all the needs that you've identified through your customer interviews in the marketplace.
John, if I could add, it's very important that you write that you're clear about what exists now and what will be done in the future. Don't use vague tenses or write about things in the future using the present tense. Judges will take a negative view of that and will feel that you're trying to be deceptive even if you're not. So be really clear about what is real and what you're going to build. Nobody expects you to have built everything. In fact, many of you won't have built anything, and that's okay.
Right.
But just be clear about it. Don't be sloppy in your language about what exists and what really exists.
You anticipated my next slide, which gets into that a little bit more about where are you in your product development or service development? Is it just something on paper, an idea written down, or do you actually have a prototype, or do you have a beta test version, or perhaps you're already in full production, in which case you should definitely say that. That's the best kind of company to be starting up if you've already got some revenue and you're really starting to roll. But obviously you can write a business plan at any one of those levels, and so you need to describe that. And include industry information in the same section. This gets back to secondary research. If you don't know a lot about your space, your industry, your sector, whatever you want to call it, you can find out more through secondary research at Gelman or any on the internet searches, that sort of thing. But you do need to in this section talk about the size of the industry. And I'd also talk about whether the industry is growing. If you can get a chart or some information, or maybe it's declining. Nothing wrong with starting a newspaper, but frankly the print newspaper industry would be going down if you had a bar chart. I mean, that's a shrinking industry right now. If you're writing a mobile app, it's probably got a nice steep growth curve, which means you'll have some really good wind in your sails as you start your business, because it's a growing industry you're jumping into. So it's all important to cover that in this section. And then the last point on the industry is, how is it structured? Some industries are dominated by 2 or 3 large firms, big companies. Others are structured by lots of small businesses. Which is your industry characterized by? Or which do you think is better if you're jumping into an industry? Would you rather be in one that's dominated by big firms, or one that's a lot of small guys like you? What's better? I'm sorry? Okay. Tell me what you mean by it. It depends on. Mm-hmm. So you're saying you could probably win either way by adjusting your strategy and your value prop accordingly, depending on the structure of the industry. I like that answer. Most people like to get in ones that are not dominated by big guys because they're afraid the big guy is going to come after them. I mean, my first company was in fact, several of mine were software companies. And I was always scared, frankly, that Microsoft was going to jump into my niche market that I served, and I'd be dead. But fortunately, that wasn't the case. I kept my place among a lot of small competitors, and fortunately was first mover, so I had the advantage of getting in there first. But when you're looking at competition, it's not just who you're competing with today. Because like I was saying, when I started my first software company, I was the first one in this niche market here in D.C., and more people came into that market every year. So you got to be prepared for influx of new customers and plan for that, and not just for what exists today. Any other questions on the product or service fit with the marketplace? Okay, let's go on to customer development. And this is one that should be very easy for you to write about, because with your business model canvas, you've already done interviews and you've got a lot of information available to write this section. I'd caution you not to copy anything directly from your canvas into the business plan, because the judges are going to have your canvas too. And they don't want to see you taking a shortcut and just copying stuff. But obviously you can draw on the material on your canvas, but you got to write new conclusions and good English language descriptions of what went on during your customer interviews and your customer development. And then describe any pivots that you made as you went through the process of interviewing customers. What changes occurred, why those changes were for the better, why it ultimately means that your venture is structured today for success. So you got to sort of walk the reader through that process from the interviews right on through to today's structure, and put it. But again, you've got all the information you need in your head or on your canvas because you've been using the lean startup approach. Any questions on customer development? Let's go on to number 4. this is one of my favorites. The strategy and value proposition, sometimes called competitive advantage. I'm going to really talk about target marketing and customers, each of these points as we go through here, because there's a lot of material to cover in this section. The three most successful strategies for starting any new business anywhere in the world are these three, according to the ultimate expert on competitiveness, and that's Michael Porter, the Harvard Business School professor who's been doing this for 30 years. And he's defined the three most successful strategies as these three: low-cost strategy, which is, we call it the McDonald's or the Walmart strategy, where you come in with the lowest price and the widest selection of products; or product differentiation strategy, and Apple wrote the book on how to do that. In other words, come out with a really cool, neat, nifty product that differentiates it from anything else available. Or the third approach, which is the market focus strategy, where you dig into a niche market and become an expert in your particular niche area. That's what I did with my first software company. I was here in Washington and wanted to do a software startup, and the nonprofit industry here in Washington is huge. And among other things, there were 5,000 to 10,000 national headquarters for membership-based nonprofits, what are called associations. But there was no software available that specialized in that niche market. And so I pursued this approach. Some people know, well, everybody knows Netflix. That's a niche market, because you're within the entertainment industry, big industry, and then within that there's a movies segment, and then within movies you got subsections for going to the theater, TV movies, or the kind that Netflix sells, which are the best sellers, whatever you can get. And Netflix is an amazing company. They not only had the biggest increase in their market value, market cap last year of any company in the United States, but they've also are morphing constantly into different methods of delivery. They started out delivering everything through the U.S. Postal Service. Now they're delivering most of the stuff through the internet. Who knows what they're going to be doing next? But they are just an amazing company. In fact, they're not only a market-focused strategy, they're really sort of a product differentiation and a low-cost strategy. They've sort of rolled all three strategies into one, and maybe that's why they're so successful and why their stock went up more last year than any other company in the country. Another example of market focus would be, focus on golf clubs. That's just a very narrow area. Golfers, love certain things about their clubs and certain characteristics, and Ping is one company that's really mastered that. Not that there aren't several others, but you get down to a narrow focus and really become an expert in that one area. And that's a great way to succeed as a startup company, because you'll know more about golfers and their swing and what kind of putter they like and everything about than anybody in the world by the time you do your research on this business, and then you can really succeed. In fact, you can think of the marketplace as being a big jigsaw puzzle, and like in the nonprofit world that I was looking at this big array of nonprofits, and then there are all these that, and I just took one little piece here and said, okay, these are the nonprofits that have memberships that are in Washington, D.C., and I focused on that. And that was my niche market strategy. And that's the company that I had for 30 years. We move right along here. So we've talked about a lot of this, but let me get into these last couple of bullets. You need to estimate the size of the market. They're with the nonprofit membership associations, I knew there were between 5,000 and 10,000. In fact, I knew it was the single largest non-government industry here in Washington, D.C., and I did some research on that and started doing my customer interviews and meeting with association executives that manage these groups. But I had no idea what the size of the market was because no one gathered information. And we didn't have Gelman Library's marketresearch.com database at that time. So I went around and tried to come up with my own estimates. But you do need to somehow come up with estimates on the size of the industry you're getting into so you know what the potential is and you know how to segment it and figure out where to put your effort when you're trying to break into an industry and become a real player in that particular space. And you will become an expert on the unique needs and trends. You'll know everything about it if you follow this strategy. The value proposition, my favorite part here. Come up with a way to articulate your value proposition, to state it as clearly and convincingly as possible. What is it about your service or your product that really makes it special in your marketplace? Is it innovations you've come up with that are embedded in your service and your product? What is it about it that makes it really, really great? And once you've done this, you need to sort of articulate it like a pitch. But you even need to get down shorter than an elevator pitch. I like it when you come down to something that's almost like a tagline. There was one I saw recently. Tell me what company this is. This is a tagline, which is really their value proposition. When it absolutely, positively has to be there overnight. What company is that? FedEx, yeah. And they have that on their trucks. You know, they put it on their packages, all kinds of places. It's their value proposition. When it absolutely, positively has to be there overnight. You probably know some value propositions like that for other products or other services. I mean, FedEx is really a service. It's not a product, except for the envelopes you put it in. Does anybody have any favorites? Favorite value propositions or taglines, things like that really summarize it. And when you come up with one of these for your particular product or service, you want to use it over and over again. You want so that as you use it, people will begin to remember it, and they'll see it over and over again, and it can become associated with your brand name. So you have a brand, which we'll talk about trademarks later, how you trademark a name, but to go with that trademark, you have a tagline or value proposition that people will remember. Anybody have any that they want to share with us that they think of offhand for some favorite product?
Amazon's is to be the most customer-centric company on earth.
Oh, that's wonderful. I love that one. And that's another company that's done extremely well over a period of many, many years. Their market cap went soaring last year also. Not quite as much as Netflix, but it was right up there. We're going to talk about Amazon later with the announcement they made this morning. We're going to get into that. Okay, let's move along here. And then the last thing in this section would be your competitor analysis, where you actually go into what your primary research showed from your customer interviews about your competition. And that's probably the most valuable research you'll do. Market research is what you gathered on your own, on a primary level through your own contact with people in the industry. But then also what you learned through your secondary research about the industry. And secondary is the research you do in the library or online through databases. But the key to success in understanding your competition is in the primary, I would say, because you need to get out of the building, as they say. Get out, walk around, see what's going on with customers, see what's going on in the industry, and really learn it yourself. Become intimate with it. And remember, we're talking about competitors. As I said before, there are three different categories. The direct ones, the ones you can identify today. The indirect ones that have a slightly different service or slightly different product, but still it competes because somebody could bypass yours and buy this other one that works differently or does something differently because the benefit might be similar enough that that indirect competitor is really going to be a major competitor for you. And then there are the future ones, the ones that haven't come along yet. And usually when you're trying to figure out who the future competitors are, you look at big companies that know something about your space, but just are not competing with you today. In fact, it could be a company like Amazon that keeps getting into new areas, or Google, another example. I mean, Google's going to apparently develop a smart car. Whoever thought of Google as being an automobile company? But anyway, you've got to look to the big guys that have expertise as potential competitors and plan for that as best you possibly can. And then the last point, I said I was going to talk about trademarks. I want to cover all the forms of intellectual property here real quick, because this is how you establish a barrier to entry. Your competitors can't compete with you if you have a patent on the product that you're selling. And they obviously can't use your name if you have a trademark on your name. So you really need to look at this. Trademark is technically not just on a name. It's what's called trade dress. It could be a logo, a symbol. Could be just the name of the company too. Could be all those things that you'd want to get trademarked to protect your trade dress, as they call it. And on copyrights, that's really important. If you have anything that is either a work of authorship or a song or anything written, a poem, and obviously when you publish a book, you get a copyright on that. So it's works of authorship. That's what copyrights are for. And that instead of applying to the Patent and Trademark Office, you apply to the Library of Congress for a copyright. But those are all pretty straightforward to get. And then the last item on the list is trade secret. Who can describe for us what a trade secret is as distinct from these other things? Yeah. Yeah, it's knowledge that you have that you keep a secret. Exactly. The classic example is Coca-Cola. They've never tried to patent their formula. They just keep it a secret. In fact, we had one of the winning teams of this competition a few years ago that came up with a new kombucha called Capital Kombucha, and that company's doing very well now. And their formula for brewing their probiotic tea, the kombucha, is a secret, and nobody knows what's in it except for the founders, and they don't tell anybody. So it's a trade secret, and it works. That company's doing very well. There are a lot of examples of that, but don't overlook that as a possibility. Yeah.
Are we supposed to just like say that in this document? Like, I have a trade secret. You're not going to disclose it, but I mean, I'm not sure how to incorporate it into this kind of a document. I mean, it's not enough to say one.
No, you don't. You just want to tell them you don't want to disclose it for sure. Definitely don't disclose it to the judges, but you want to tell them how you're protecting it. And if you're not protecting it with a patent, then you describe how you're going to protect it with a trade secret approach as an alternative to a patent. Because once you get a patent, by the way, anybody can read about that patent by going online to the USPTO, U.S. Patent and Trademark Office, uspto.gov. Got to know that website. Yeah.
I'm wondering if you consider contacts
to minimize the cost of getting your patent?
No. For example, if your business is built on a number of relationships, that's
Oh, I see.
very hard to build
Mm-hmm.
for anyone else that
Mm-hmm.
maybe wasn't on the ground, et cetera, et cetera.
Okay.
How do you describe this in the business plan as intellectual property that can't be easily replicated?
Very good. I think you just simply describe it as best you can without giving away any information about how anybody else could replicate what you've done by establishing the same contacts in the same network that you have. You don't want to give that away, but you want to just explain that you've established this, and this is the secret to success.
I guess my question is this intellectual property? Like these connections, is this intellectual property?
I don't know how you could patent it or trademark it or copyright it. I don't think you could do any of those three based on what...
What about through partnership contracts?
Oh, sure. Oh, sure. You can do all kinds of things through... In fact, trade secrets can be protected through contracts, too. Like if you have two partners and you're starting a kombucha company, you want to have an agreement among the partners that you're not going to tell anybody else. Because, trust your partners, but verify by putting it in writing with a contract. I think that's a good...
It's a bit arbitrary, but strictly speaking, that would not be considered intellectual property.
Right.
But it's very important to be considered barriers to entry and part of your competitive advantage, right? You've built something that will take other companies a long time to replicate. So it's a powerful competitive advantage, and it's a barrier to entry. Strictly speaking, it's not.
Any other questions on this item before we go to the next one? How do you get a patent? Actually, I'd recommend you look at a provisional patent short term and a full patent long term. And the difference is in the cost and the detail you have to include in your application to the Patent and Trademark Office. Provisional patent you can usually get for $1,000 or so, or maybe less in terms of actual dollars out of pocket. It's good for 1 year, and it can't be extended beyond 1 year except by getting the full patent, which is called a utility patent. And the utility patent is going to cost you lots, usually $20,000 to $30,000, maybe $40,000, depending on the law firm you hire to do the legal work on it. It's a big deal getting a patent nowadays, and it can take a long time. I had one that took 6-7 years on one company I was starting. But fortunately, once it's approved, it's retroactive and in effect from the date that you applied for it. So you're protected during all that period. But I'd recommend, to answer your question, you get a provisional patent to start with. In fact, Peter Weissman's going to be talking March 8th here. And Peter is very good at answering questions about getting provisional patents. And he's been known to help many of our teams here at GW get their provisionals.
Better still, Peter will do an hour of consultation with any GW student on a legal issue, and his specialty is intellectual property patents. If you catch me afterwards, I'll give you the contact information.
Okay, let's jump into number 5, marketing, customer relationships, and channels. I'm going to talk about really these 5 elements of marketing: positioning, pricing, advertising versus PR, sales channels, and distribution channels, which are really elements of this whole section of your business plan. And not all, as you've already figured out, not everything that I'm talking about tonight applies to every company. So you have to pick and choose what applies to your business. But on your positioning strategy, you have to know who your sub-market is that you're really pitching to. If you're selling an electric car, Tesla Model S or whatever that is, you got to know exactly who the potential buyers are for a $75,000 car. and why it's a very different market than the market for the Nissan Leaf or the Ford Focus electric car, or I mean, there are a lot of electric cars out there now, but Tesla seems to be the one that's the winner nowadays. So you really have to position yourself so you're advertising in the right magazines, the right places, the right direct mail, the right websites for your pop-ups. Everything has to be focused on your market and how you're positioning it within that market. Same as Starbucks has a very special market that they go after, and they've obviously done very well in positioning themselves within that market. But it all comes down to market research and understanding your customer so you can be positioned properly. Pricing. There are sort of two different approaches to pricing, cost-based and value-based. And frankly, I don't recommend cost-based, where you look at all your costs and say, I want to charge 10% or 20% more than that. I don't really recommend that for a couple of reasons. One is that you don't always know what all your costs are. It's really hard to compute it. And the second is that you're probably underpricing by using a cost-based approach. You're probably better off, once you've done all your customer interviews and you understand from talking to people what they're willing to pay, going with what's called the value-based approach. And the other reason to use value-based is it's usually higher, so you can actually have a better profit margin at the end of the day than you would with a cost-based approach. And you never want to have to increase your price because you've underpriced it. It's better to start with a little higher price, and then if you realize you have room to come down a little bit and increase your sales as a result of lowering the price, do so later. But don't underprice it in the beginning. You want to price it as fully as you can on a full value basis. That's really an important thing. Any questions on pricing? Let's talk about advertising versus public relations. Two very different approaches to getting out into your marketplace and letting everybody know you exist. Which one do you think has better credibility and success at the end of the day between the two approaches? Public relations. Yeah, would you rather buy an ad in the GW Hatchet and have a nice ad in there, or would you rather have an article written about your new company? Well, see, the article's free. The ad's going to cost you several $1,000s. So to me, it's really a no-brainer. You want to go as much as you can with public relations. Issue press releases, get out there in the media, get interviewed, be on talk shows, whatever you can do to get your story out there. Articles in newspapers, blogs, electronic newsletters. A lot of people are now doing daily or weekly newsletters, not just monthly, but with the internet, it's so easy to get the word out there to your target market. If you can get the email access to your target market, it's just fabulous. Whereas advertising is expensive. My other favorite example is last month, actually earlier this month, the Super Bowl. 30-second ad, $5 million. That's one option. The other option is what Under Armour does. All those players they're interviewing after the game, they've got all this Under Armour stuff on. They paid nothing. And that's much, much better for their company in terms of getting the word out and selling more product than paying $5 million for a 30-second ad. Much better. They have to work to get that positioning. They had to work to get everybody wearing the stuff, and you know, you'll come out much further ahead in the end, not only in credibility, but also in dollars saved. If you develop a strategy that's based on PR or publicity, call it, any kind of publicity, versus paid advertising. With any product or service, there's a what's called the sales funnel, where at step one, you've got a huge number of prospects that you're trying to convince to buy your product, and you have to work them through the steps to become customers. It could be done with a sales staff, where you're actually talking to customers in their offices or in their homes, whatever, or it could be done through an internet winnowing process, where you can narrow it down by monitoring responses to click-throughs and various Google ads of all varieties they have now. So you have the prospects, and you got to work through contacting them. In other words, getting to email you, where you're in email conversation, and then you qualify the lead. You make sure that they are the kind of buyer you're looking for in terms of their ability to pay the price and use the product. You know, you got to qualify them. Then you got to get into a presentation somehow, get them more information in front of them so that you can close the sale in step 6. And then the ratio of how many came in the top of the funnel in step 1 to the number that you close in step 6 is your prospects to customers ratio. And if you can get that process quantified and defined, so you know that you're going to close, you know, a good percentage of the ones that come in the top of the funnel at step 1, then you've got a good sales cycle worked out. I'm not saying it's easy to do that. It's a lot of work. But you need to figure out what your funnel looks like and how you can work people from the top to the bottom and actually get some dollars in the door at the bottom of the funnel. And cycle refers to how long it takes. Does it take a year, or does it take 2 days? You know, what's the time frame for working a customer through the funnel, or a prospect, I should say. And then the distribution channel. How are you going to get your product or service out there once someone buys it? Is it something you just email to them, or is it something that goes through the mail? Amazon, our old example here. In fact, I think it was in somewhere online this morning I read about Amazon's spending, was it $11 billion a year delivering stuff to the people that buy it from them. And Amazon Prime, of course, you don't have to pay for that. But they just had a change in their policy that they announced this morning, that if you're not on Amazon Prime, that it used to be they'd ship it free if it was $35 or more that you're spending. And they announced this morning it was going up to $49 as being the threshold for non-Prime members to get something shipped to them free. And that's because this is becoming a huge cost. Not just for Amazon, but for everybody. How do you get stuff delivered? And what is your distribution strategy? Where do you locate your products? If it's a retail product, you know, how do you've got to put the stores or the outlets or the email click-throughs in the right place where your marketplace will see them when they're shopping online or in a bricks and mortar environment, either one. Distribution is not trivial, as Amazon has taught us. Okay, I'm going to move on to section 6 out of the 8 sections. And this one's a little bit like customer development was. You've got all the information you need to write section 6 in your canvas, assuming you've got a complete canvas. Because it's really just 3 things here we're looking for: activities, resources, and partners. And as I say here, don't copy it. No cut and paste. You got to write new, interesting language for your business plan separate from what's on your canvas, because the judges have your canvas too. But you should be able to nail Section 6 and get the points for that if you've done a good job on your canvas. But the key is being able to describe the importance that each one of these roles plays in the execution of your plan and sort of how it all comes together. In fact, just an example here in operations, this is another one. If you have a retail business, like a restaurant or anything where you're actually dealing with customers face to face, you got to look at all these factors in this operations section. Where do you locate your outlets? Proximity to your customers, access to the labor force, suppliers. In other words, the transportation issue that Amazon has, how much they're spending on getting stuff out there. They have to look. Amazon has to locate their warehouses to minimize the cost of getting from a warehouse to where their customers are located in cities. You have to look at tax issues sometimes if you're locating a warehouse, economic incentives. In fact, here in D.C., there are tremendous incentives for technology companies that are founded in a certain sector of Washington, D.C., called the Technology Corridor. And if you're in that corridor, you're tax-free. So you can't ignore minor things like tax avoidance if you qualify for it in the right ways. And then proximity to the kind of employees, high-quality employees that you need to find. Where do you locate your offices? Intellectual property. So all this stuff on operations sounds dull on the surface, but it's really important when you peel the onion and get down to the details of it. Very important to the success of your business. Any questions on operations? Yeah.
I'm wondering how interesting and how much value it would add to have modeling in our business plan.
Modeling? If you've got a model, I'd definitely put it in there. I don't think many people here have tried to model all this. Tell me about your model.
I'm just trying to basically model on the computer like the steps of our execution.
Great.
But I'm wondering if it's worth the space.
Well, yeah, you may want to, as I said before, you don't want to take more than 1 or 2 pages for any of these sections. So you would have a space constraint. If you can say it in an abbreviated format somehow, or actually a picture is worth 1,000 words. Sometimes you can do diagrams, like the bar chart I had up here earlier. You could see so much more in a graph or a chart form if you could do a diagram. Yeah, if you could model your model. Other questions? Yeah. I'm sorry?
Something like a model could go in the appendix?
You could, absolutely. That's a great use of those 5 pages of the appendix. You can talk about it in brief in the 10-page written section, and then reference it and have a big diagram and explanation in the appendix, where you can use a smaller typeface, and well, you know all the rules. Good questions. Okay, let's move to number 7, the management team. And there are really just 2 important points I want to make about your management team. You don't need to get into board of directors or board of advisors or all this other stuff necessarily, but you need to definitely talk about your team, and maybe about a board of advisors if you're thinking of going that way. A board of directors is just simply something corporations have to have by law. If you're incorporated, then you have to have a board of directors, but there's really, unless that's part of your plan to have a board of directors and it's going to help you sell your product and be successful, I wouldn't even bother talking about the board of directors or the other professionals. Again, if there's another professional that really is key to your success, that's going to open doors for you and help you succeed, talk about it. So take advantage of what you need to take advantage of on this list of venture structure, we'll call it, other people, but definitely talk about your team. have a brief profile, could just be a sentence or something, about how your team members break down in terms of their responsibilities within the company. Maybe you've got titles, maybe you don't have titles, that doesn't matter, but we need to have some explanation of how each person is contributing to the success. Each member of the team is contributing to the success of the company. And ideally, what the judges would like to see is that your team is made up of complementary individuals, that you're not all studying electrical engineering in the same program together, but you actually have some complementary aspects in terms of what you bring to the table. And what your previous experience is and past success. Whatever's relevant to really convince the judges that you've got a great team that's working together in concert to make the company successful. And then on the Board of Advisors question, if you do want to have a Board of Advisors, and I recommend that you will eventually want to have one, there are a lot of ways you can do it, and it's usually made up of customers, where you can bring customers in and give them access to sort of inside information that you can share with them on new product developments, and you get feedback from them just like you do from your customer interviews. In fact, a Board of Advisors is a way to extend your customer interviews in a way. So the longer you're in business, the more good feedback you get. In my software business, I'd always have what was called a users group. So the companies that are using the software would all have this feeling that they're insiders and you're listening to their feedback and innovative ideas in some cases on how to enhance the software for the benefit of not only them, but the other users of the software.
John has a quick question.
Yeah.
At this stage, is it fine, you think, for them just to say they have advisors and not be pushing board of advisors, if that's a more formal, or can they just kind of use it loosely?
I'd go either way, whatever works for you. You don't have to be formal. In fact, it may not be a Board of Advisors. Mine, as I said, was called a users group. You can have a forum, an insiders forum. There are all kinds of ways to do this, but you want to have constant contact with your customers, and this is a way of formalizing that contact by setting up some sort of a group that could get together periodically, either electronically or Skyping or GoToMeeting or in person occasionally. It's nice to do in-person meetings periodically. Have an annual user group meeting is what I would have. Everybody would come in and we'd move it, from be in San Francisco one year, in New York, you move it to different cities. So you'll draw different people into the actual in-person meetings on an annual basis. Okay, let me move to the final section on the financial projections. Okay, 3 things are required: income statements, 3 years, cash flow statements, although we're not going to do what's an auditor or an accountant would call a cash flow statement. We're just going to change the income statement to put it on a cash basis to make it easy. It's too much work to do an actual cash flow statement that accountants do. And then thirdly, the capital required. I'm going to start with a XYZ Corporation, and this is a company that's launching in May after graduation, and they've got some projected sales that are going up by $2,000 a month starting in May. So by the end of the year, it's up to $16,000 in the month of December, with a total of $72,000 for the whole year. And then we're going to talk about the expenses, and I've just broken it down into these 4 categories of expenses to make it simple. You may have more detail than this, but this gives you the idea. You want to always start off with your cost of goods sold, assuming you have to buy stuff, raw materials, in order to deliver this sales. And I've just made it 50% of this line is on this line, right straight across. So in December, 8,000 is half of 16. And those are the costs of the inputs. And then your fixed costs, like your rent, insurance, just the fixed costs of having a business every month, telephone, whatever you have, put $1,000 a month in here. And the third category of expense is depreciation. So whatever you had to spend up front on buying equipment or furniture or computers or whatever you had to spend up front, accountants require you to depreciate that over a period of time, usually 3 years. So you would have in your depreciation 1/36th each month for 36 months or 3 years. And that's just the way the accountants do it. In other words, you can't deduct the whole amount up front in the first month under generally accepted accounting principles. You've got to spread it out because that computer is going to last 3 years, let's say. And so that's the depreciation line. And then the last line I've got here are salaries and wages. I've just put $4,000 a month for the founder to get started here. Then the total expenses. And then when you do the math, you can see there were losses starting in May, pretty big, $4,250 that month, and it got a little bit less each month. And then they finally broke even in October and had a little profit. And by the end of the year, they had a little bit more profit, but they lost $6,000 for the year. This is all an income statement, generally accepted accounting principles, revenue on the top, expenses underneath that, profit on the bottom line. What we're trying to get to, as I had on the previous slide, is the bottom line is how much capital do we need to raise from investors to launch this business? Can you figure out how much capital this company needs to raise from the information you see on this income statement? Anybody have any suggestions how much capital they're going to need? They're going to lose $6,000 by the end of the year.
The amount of expenses, that's 7/8 more or less.
I'm sorry, could you speak up?
7/8 of the expenses plus less depreciation plus the equipment that you bought to generate this depreciation more or less. I think this is the first year.
How much is that?
I don't know how much we are depreciating.
Yeah.
You had 3 years, you said?
Yes. But they're making money in 2017 and 18. But it is 3 years, you're right.
Yeah.
But you're on the right track because you're thinking cash.
Mm-hmm.
And that's the right way to think.
Yeah.
And this is not cash. This is generally accepted accounting principles, which has this depreciation as an expense, which actually they're not paying anything out every month. They bought the computers or the furniture up front in the beginning, and that's when they needed the cash.
Yeah, that's what I said. What
Yeah.
the capital they invest to buy the equipment that generates depreciation, less the depreciation they're using the total expense.
Exactly. So you could figure it out if you took the time to do it. The way to do it is exactly what she's saying, to turn it into a cash flow projection. And there are 3 things you need to adjust, and I've highlighted them in yellow. It's this top line, because the sale you make in May, you may not collect the money for. You send them an invoice in May and then hope they pay it. If it's B2B, if it's a business, they may not pay it for 2 months maybe, or 1 month. If it's a credit card, it may not get back to you for a certain period of time after that until the money's in your bank account. But I've assumed sort of a worst case here where the sales made in May, which was $2,000, you actually get paid 2 months later. And the sale made in June, which was $4,000, you get paid in August. Everything is lagged by 2 months, cash basis. And then on cost of goods sold, I don't have to pay for the supplies I bought in May until June, assuming it's a net 30-day typical B2B transaction. So I get 30 days use of the product, the cost of the goods I bought before I have to pay for them. So that has to be adjusted by 1 month. The $1,000 I bought, that dollars worth of goods I bought in May, I pay for in June. Then the $2,000 I bought in June, I pay for in July, etc. And then the third thing is to take out the depreciation, because that was really no cash. you paid for it up front by buying, what did I say here, furniture, phones, and some PC networking workstations, $9,000. And the $9,000 is going to be depreciated over 36 months. So those are the adjustments you have to make. These are called operating activities up here, which is the income statement that you've adjusted. These are called investing activities, which are capital purchases. And then the last, we'll get to this later, is financing activities, where you got money in from investors or for bank loans or something to help cover this negative cash flow. So just by making those three simple adjustments there and putting in the $9,000 that I had to spend on the capital equipment up front, I can see it's actually negative $35,000 compared to negative $6,000 that we had on the previous screen right here. Big difference. And this is not rocket science. You can make these kinds of adjustments. It's not hard. The big ones are obviously the $9,000 here, and then that removes the depreciation because you paid for it up front. These may not be that significant for you if you're getting paid instantly, and if you're paying for what you buy instantly, then you don't have to make these two adjustments. But you find out in a B2B world, you want to negotiate where you don't have to pay for stuff until 1 month or 2 months later. It's a great way to finance your startup is to get terms on your accounts payable so you don't have to pay your bills instantly. Okay, so this is $35,000. Is that the amount of money we need to raise to start this business? Is that the answer to the question on the back row? You're saying no, it's not.
How are you going to live for that year?
Well, you've got salaries in there, $4,000 a month. Maybe you're doing this nights and weekends the first year. This is just an example. So you think you'd like to see more on the salaries line. But you can put anything on that. This is just a sample. Cheyenne?
I think you'd be aiming to raise like 95,000.
Why? Why 95,000? That's a good answer.
Because if you're projecting those are your costs for the first 3 years, you don't want to have to, after the first year, go into fundraising mode again.
Mm-hmm.
And I think it's more productive to try to raise it all in the first period. And then build it out.
It's very reasonable, I think. 95,000 gives you a lot of cushion. $60,000 cushion to be exact. If everything goes according to plan, it'd be 35,000 you'd use of the 90,000. $55,000. You said 90,000 or 90?
Yeah, sorry, 55 is positive though. So, sorry, I was just adding that one. But generally,
No, that's cumulative.
of 2018 roll that I think is positive.
Mm-hmm.
So maybe, yeah, maybe around there, maybe like double. Maybe that.
I like that, what you just said, double. When I took my MBA course in entrepreneurship, my professor said that you should do all your best guess on cash flow projections, figure out what your needs are, and then double it. Unless you have some reason to do less than double or more than double because of the potential volatility of the business. You're really trying to anticipate the fact that everything's not going to go perfectly on a straight line basis. 2,000 more of revenue every month like we had in the initial projections. If it's going to be a jagged curve with a lot of volatility in it, you want to up your cushion to a higher level. But he said if you don't have any other reason to go higher or lower, he recommended doubling it. And actually, when I started my first business, I doubled it, and I actually ended up needing 95% of the money I raised. It just barely squeaked by, in other words. So the doubling it worked, it was enough, but I ended up not having much of any cushion at all. But I basically used the same approach, trying to figure out cash flow and doubling it. So based on the doubling formula, the answer would be 70,000. So you've got a nice cushion in there to account for uncertainties and volatility that may occur as you go down the road. So what I've done here is come up with a plan for raising 35 plus 5 plus 20, that's 60, and then borrowing 10,000 from the bank on a line of credit secured by my receivables, which are running 12,000 a month. So I could get that secured without my personal guarantee, although the banks always want you to personally guarantee whatever you do. But anyway, it would be covered by your receivables where you have customers owing you a certain amount at a point in time, and then the bank will lend you 10,000 on the line of credit secured by those receivables. Receivables are basically revenue that you haven't been paid yet, called accounts receivable. So this is a way to do the 70,000, and basically the way I've said here is win 35,000 from the GW new venture competition, get a certain amount from the founders, 5,000, so everybody's got a little bit of skin in the game among the founders, and then go outside to investors for 20,000. So basically by raising 20,000 on the outside, you've got a total of 70,000 total. So you've come up with a way not to have diluted your owner shares any more than you have to in the process of coming up with all the capital you need, which in this case, in this example, I should say, is $70,000. Any questions on sort of how you think your way through this process of figuring out how much capital to raise, how much you'll need? And I think Cheyenne is right that you don't want to have to go back and have another round in the next year or 2 years. You want to have enough to get through a period of time. Ultimately, you will hopefully succeed, and you'll go back and you'll do a venture round later with venture capitalists, and maybe in between that round and the first round, maybe do an angel round. So you start with friends and family, then go to the angel round, and then go to a VC or venture capital round later as the company grows and can sustain it. Okay, let's move right up. You don't need a balance sheet, fortunately, in the new venture competition, but it's something that a lot of people generate because various models that you use to project your finances and to do all this kind of projections will come out with a balance sheet. So if you have one, that's fine. You can throw it in the appendix, but it's not required. We've already covered these points. Have the founders contribute what they can so they have skin in the game and get the rest of it from outside sources. And in the first round, it's usually friends and family. If you're lucky enough to know, an angel that might come in and invest a little bit more than your friends do, that's fine, depending on how big the numbers are. And then just a reminder of what Lex told you earlier, the deadline is noon on March 1st. Don't forget all the details about the font types and the margins and all this stuff. It's important. And then you'll be notified on March 15th, hopefully, that you're a winner. Oh, and if you'd like copies of my slides, this is my email address. I can shoot you a copy of the slides. Just send me an email and let me know that you're interested in having the slides. And I very sincerely wish all of you good luck in getting everything done by March 1st and becoming a winner. Thank you very much. How are we doing on time?
We have about 4 minutes. Try to squeeze in a couple of questions. You gotta finish right at 7 and put pizza outside, so don't let the employees. But want to get a question before we go? John.
Yes, sir.
I actually had a question about your strategy
Yeah.
How advantageous would you say it is to maybe combine, not just pick one strategy, but combine maybe two of the strategies? Like you kind of mentioned, but if we're not Netflix, how would you recommend focusing on one or maybe kind of pulling them two?
Which one are you thinking is going to be your main strategy between those three Michael Porter options that we talked about?
Yeah, probably the low cost strategy.
The low-cost strategy, the first one? So you're going to go big time. The Walmart approach, I like that. That's awesome. If you can work in the others with that, because obviously the people that are going to be inclined to buy a low-cost product, you're already segmenting demographically or by income somehow differently, so you can target them better. I would definitely work that into your strategy so that you're not targeting millionaires with your local.
You do have a very specific niche, I guess.
Yeah.
So, I mean, when I was looking at that, I couldn't help but also think about the market focus strategy as well.
Sure. The more you can work in, the better. As I said, Netflix had really elements of all three. So the more the better, I'd say. Sounds like a great idea you got. We should talk. Other questions? Yeah.
Yeah, thank you so much. And I'm Fabrice. I'm from Congo, Africa. I'm just visiting. And I want to thank you for the opportunity in this exchange. And I had a question on the previous slide, mostly on pricing, especially with the local strategies. And the thing is, mostly pricing is good. I think it's good to start with a high value and then increase as per the value-based approach. You start with high and then you can decrease.
That's right. The value-based approach to pricing is the one I recommend for sure.
Yeah. And also on the low-cost strategy, I wanted to know, is that sustainable or it's good to start with a lower cost just to integrate the market? And then once you have customers, they are pointed to you, then you increase according to how the market is. Because sometimes in the Congo, for instance, when the prices are lower, people tend to think that the quality is also a bit poor.
Starting a company using the low-cost strategy is not easy, because you need volume to sustain a company that's using a low-cost strategy. And unless you talk to these guys on the back row and find out some secret they have, I usually don't recommend that you use the low-cost strategy, the Walmart strategy. That's the one you're talking about, right? Yeah, it's very difficult because you have to have volume. Which means you need a lot of capital up front to launch the company, to set up all the warehouses, outlets, distribution systems like McDonald's have, all that sort of thing. It's not easy. But if you're doing it in a small area, would you be doing this in Congo or in this country? In the Congo, sure. It might be possible there, because if you can set it up on a controlled basis in a smaller area, that might work. You're going to have to be the expert on that one. I don't know the marketplace that well there, but I hope it works for you. What kind of product would it be?
Yeah, I'm thinking about the product, mostly agribusiness.
Agribusiness? Mm-hmm.
Treating the product of milk.
Good. We should talk afterwards. I think we're out of time.
We have to quit. We're out of time. Thank you.
Okay.
Thank you very much.
Thank you all.